In this section, we will discuss about the functions of payment banks. These are a new model of banking system introduced by RBI in the year 2014 as per the recommendation of Nachiket Moore Committee. A brief explanation about the functioning of payment banks in India are given in this section. These payment banks were set up on the basis of the recommendation of the Committee on Comprehensive Financial Services for Small Business and Low Income Household, which was chaired by the Nachiket Moore, and the objective was to improving financial inclusion by improving the technology services via mobile telephony, etc. This was the background of the setting up of the payment banks in India. That is, it was on the basis of the Nachiket Moore Committee. It is a new model of bank conceptualized by the Reserve Bank of India. They can accept deposit at a restricted amount, which is currently limited to rupees 1 lakh per customer and may be increased further. This bank cannot issue loans and credit cards. Both the current account and saving account can be operated by such banks. They can issue services like ATM card, debit card, net banking, mobile banking, etc. India's first live payment bank system was introduced by Bharati Airtel setup. These are the features or the points to remember in this case. They can accept deposit up to a limit of 1 lakh per customer. They cannot provide loans or credit card. They can issue debit card, ATM card, net banking, mobile banking service. India's first payment bank was set up by the Bharati Airtel. And a small background of the starting up of these payment banks are given in this section. On 23rd September 2013, Committee on Comprehensive Financial Service for Small Business and Low Income Households, headed by Nachiket Moore, was formed by the RBI. On 7th January 2014, they submitted its final report. Among the various recommendations, they recommended the formation of a new category of a bank called payment banks. And on 17th July 2014, RBI released the draft guidelines for the payment bank, seeking the comments for interested entities and general public. On 27 November, RBI released the final guidelines for payment banks. These are the developments with the RBI. In February 2015, RBI released the list of entities which had applied for payment bank license. There were 41 applicants as on February 2015. It was also announced that an external advisory committee headed by Nachiket Moore would evaluate the application. That is, among these 41 applications will be scrutinized by the committee. On 28th February 2015, during the presentation of budget, it was announced that India Post will use its large network to run payment banks, and it was announced that India Post will use its network as a payment bank. The External Advisory Committee headed by Nachiket Moore submitted its finding on 6th July 2015, and the applicants' entities were examined for their final track records and government issuance. On August 19, 2015, Reserve Bank of India gave in-principle license to 11 entities to launch payment bank. The in-principle license was valid for 18 months, within which the entities must fulfill the requirements, and they are not allowed to engage in banking activities within the period. The RBI will grant full license under Section 22 of Banking Regulation Act 1949 if it is satisfied with the conditions. The objectives of setting up of payment banks are furthering up of the financial inclusion by providing small saving account, and second one, Payment or remittance service to the migrant labor workers, low-income households, small business, other unorganized sector entities, and other users. That is, this is used as a payment system rather than a loan account system. And the scope of the activities of these banks are acceptance of demand deposits. The payment banks will initially be restricted to holding a maximum balance of 1 lakh per individual customer. They can issue ATM card, debit card. They cannot issue credit card. Payment and remittance services through various channels will also be, that is, we can use internet banking, mobile banking, etc. Business correspondents of another bank subject to the RBI guidelines on business correspondents are eligible for payment banking. Then distribution of non-risk sharing simple financial products like mutual fund units, insurance products are also permitted. Deployment of fund. They cannot undertake lending activity, therefore, apart from the amount maintained in cash reserve ratio with the Reserve Bank of India, it will be required to invest minimum 75% of demand deposit balance in SLR with a maturity up to 1 year and hold the maximum 25% in current and time or fixed deposit with other scheduled banks for operational purpose and liquidity management. This is the deployment. This 75% of the demand deposit in SLR, then 25% in current time or fixed deposit account with scheduled commercial bank. The capital requirements of payment banks are minimum paid up capital for payment bank shall be 100 crores. They should have a leverage ratio of not less than 3%, that is outside the liability should not exceed 33.33. Promoter's contribution shall be at least 40% for the first 5 years from the commencement of its business. Foreign shareholding in the payment banks would be as per the foreign direct investment policy for private sector bank as amended from time to time. The operation of the bank should be fully networked and technology driven from the beginning, conforming to generally accepted standard and norms. The bank should have high powered customer grievance cell to handle customer complaints. Then some of the features of payment banks are given here. There are two kinds of banking licenses that are granted by the Reserve Bank of India: universal bank license and differentiated bank licenses. Payment banks comes under the differentiated bank licenses since it cannot offer all services that a commercial bank offer. In particular, payment bank cannot lend. That is, there exist two types of licensing, and these payment banks comes under the differentiated bank license schemes. It can take deposit up to rupees 1 lakh per account, and it can issue debit card but no credit card. Commercial banks in India like State Bank of India or ICICI do not have any such restriction. Acceptance of demand deposit initially restricted to holding maximum of rupees 1 lakh per individual. They are not allowed to give loans. Payments and remittance services through various channels are allowed. They are only allowed to invest the money received from customer deposit in government securities. They cannot accept NRI deposit. A payment bank account holder would be able to deposit and withdraw money through ATM or other service providers. The payment licenses would be granted to mobile phones, supermarket chains and others to cater to individual and small licenses. These are some of the important features that we have already discussed about these features. In India, both the payment banks and commercial banks work under the Banking Regulation Act of 1949. But there is a huge difference between the functioning of commercial banks and payment banks. That commercial banking system started very earlier, but the bank started its functioning in 2017 only. Commercial banks can accept any amount as deposit, but it is limited in the case of the payment banks. Payment banks are allowed to issue ATMs or debit cards, but not allowed to issue the credit card. The initial minimum paid up voting equity capital for commercial banks shall be 500 crores, but in the case of the payment banks, it is 100 crores. These are some of the important differences between these two banks. And some other differences are they cannot give loans. They cannot accept deposits from NRI persons. The payment banks must use the word payment bank in their name to look different from other banks, but commercial bank need not do so. Payment bank should invest at least 75% of their total demand deposit in government securities called statutory liquidity ratio with a maturity period of at least. The payment banks that are functioning in India are Airtel Payment Banks, India Post Payment Banks, Fino Payment Banks, Paytm Payment Banks, Aditya Birla Idea Payment Banks, Jio Payment Banks, Geo Payment Banks, NSDL Payment Banks. These are some of the important payment banks that are functioning in India. And in their name we can see the name payment bank. The payment banks, majority of the payment banks were established in 17 and 18, and its headquarters are also given. Airtel Payment Bank was established in 2017 and headquarters is New Delhi. India Post Payment Bank 2018 and its headquarters is also in New Delhi. Jio Payment Bank 2018 Mumbai. Paytm Payment Bank 2017 Noida, Andhra Pradesh, NSDL 2018 Mumbai, and Fino Payment Bank 2017 Mumbai. These are the features or functions of the payment bank. Here, the points to remember is that it was introduced on the recommendation of Nachike Moore Committee, and the guideline was issued in 2014 and started functioning in 2017. They can accept deposit up to a maximum of rupees 1 lakh. They cannot provide loan facilities. They can issue ATM card, debit card, etc., but they cannot issue the credit card. They can they can use internet banking, telephone banking, etc., or other means. They comes under the licensing scheme of payment banks, differentiated license schemes. They have to use the name payment bank with them, etc. are some of the important features of this bank. This about the functioning of payment banks in India.